I said in my video yesterday that there were two key points of data that led me to believe that Bitcoin would make a local bottom in the $90,000 area, and then at that point we would start to see some level of a reversal. And thus far, that's exactly what happened. Those two key points of data that led me to that belief was the fact that back after the April tariff crash, we opened up a CME gap in the $90,000 to $92,000 area, and to accompany that, there was a cluster of liquidity in that same area on the heat map. Now that we've struck down and gone through that area, that gap is filled, that liquidity has been sucked up, and now we have actually come down to 89,000, but we have started to make a reversal. And the price we're at right now is actually a very important price too, because it was the yearly opening for Bitcoin back in January of 2025. You can see this first candle body right here went down to 93,000, which is the same price that we're hovering at right now. So I believe if we can find some support around that area, we can maybe build a base to go up a little bit higher. But if we don't and we lose it, there's every possibility that we could go lower. Now, the question you might ask is, what might send us higher? What might send us lower? And I would refer back to the government that's been shut down for 45 days, and all the data that was withheld due to it being shut down. I've mentioned in my previous videos that we're going to get overwhelmed, maybe not overwhelmed, but we're going to be hit with continuous data back to back to back due to this month and a half of it not being released. And that's where we are starting to get right now. In my personal opinion, is that's what's either going to project us upwards or downwards from here on out. And the first bit of data we're going to start getting is the FOMC minutes, and that's happening tomorrow at 2 p.m. And in this report, the Fed governors are all going to come together and they're going to give us an idea of what they feel like the future of monetary policy through the Fed is going to look like. And they might make comments on the labor market. They might make comments on future rate cuts, what they think what's going to happen with inflation, and the overall well-being of the economy. And I believe due to the lack of data we've had, this will have a big impact tomorrow on the market. I think things will be steady and with people just waiting for what the Fed says, because we do have that meeting in December. And ever since the last meeting, when they started coming out with hawkish, saying that a 25 basis point cut is not baked in, people aren't sure with what they're going to do. Yes, quantitative tightening is ending on December 1st, but the Fed didn't give any guarantees on what they're going to do with rate cuts and monetary policy outside of quantitative tightening ending. And this is going to give us the first glimpse into what they're thinking about doing. So I think it's a very important report that the market is going to take very seriously and react based off the feeling that the Fed is giving out, whether they're dovish or bearish. The other bit of data that we're going to get that's very important on Thursday is the initial jobless claims. And obviously, a lot of the reason that the Fed has cut rates recently is due to a weakening labor market. So this jobless claims is going to give us an idea if the labor market is continuing to weaken, or if there's some signs of strength that are found in jobless claims aren't, we're not getting as many jobless claims as we have over the previous reports that we've gotten. So I believe the market is going to react heavily off that, and it's going to really decide what way we go over the rest of this week. And I said in my previous videos too that I think this is one of the most consequential weeks in the market going forward, because if we get a second weekly close below this 50 weekly moving average this week, that would be two weekly closes below the 50 weekly moving average, which would basically seal the deal and almost guarantee that a bear market is coming. As you can see right here, in previous bull markets, when we started to go to a bear market, this is 2021, like we're doing right now, we came down below this 50 weekly moving average, went back up, and then came crashing back down, but we came back up to retest this 50 weekly moving average, got rejected, and then went into the bear market. In 2017 was no different. We came down to test it, went up, down, came back up to retest this 50 weekly moving average, and then went into the bear market. And we are in a very, very, very similar spot right now. We came down to test it, went up, shot back down, and this is why I'm fully expecting, no matter if we break out of this or head down to a bear market, we will at some point over this next couple weeks or month come back up and retest this 50 weekly moving average. But I think the data that's coming out over these next couple weeks is going to determine whether we can break through this and break the old cycle and go back up above this 50 weekly moving average, or if we get rejected by it as we have in the past and go back down into a bear market. So these are the things that I'm going to keep my eye out on and see how the market reacts to it. And based on how the market reacts, I'm going to adjust my plan to that. And I'll be interested to see what you guys do too. Feel free to leave me a comment down below.